9323 800-597-9323. Call right now. 800-597-9323.
Hey, Jill, congratulations on your son getting into the college of his dreams and with a full scholarship, too. Yes, we are so proud of him. You know, I have to be honest. I'm a bit worried about our daughter getting into college. It's so competitive out there, and I feel overwhelmed with where to start. I completely understand. Listen, I felt the same way. And then I met Dr. Gina of Education Prep Centers. She put a plan in place that helped our son stand out in the admissions process and that gave us a peace of mind for how to create a financial roadmap for his future. Wow, that's great. Sounds like I need to give her a call. Yes, she definitely helped our son find the perfect college, meet all his deadlines, and help us feel less anxious about the whole process. You need to reach out to her. Just check out educationprepcenters.com and set up a complimentary assessment with Dr. Gina. You'll be so glad you did. Education Prep Centers, college admissions made easy.
Let's be honest. Wheelchairs are heavy, bulky, and ugly. If you carry a wheelchair in your car to take care of a loved one, you know how hard it is getting that clunky, old-style wheelchair in and out of your car. Introducing the Feathershare Wheelchair. At 13 pounds, it's the world's lightest wheelchair. It folds in seconds and fits neatly in your trunk, backseat, or closet, so you can take it everywhere. And it's only available right here. Order yours today and get a free wheelchair case, a $50 value, yours free. The Feather Chair, the world's lightest wheelchair, is just $4.99 with easy payments as low as $16 a month. Sorry, no Medicare or insurance accepted. So call right now to order yours.
800-823-5826. 800-823-5826. 800-823-5826. That's 800-823-5826.
Hey, there's something you forgot to do. It sure is hot. Are you sweating like a dog? Wait, what? Dogs don't sweat. Oh no, you forgot to get your window tinted. Whether it's the kitchen window that sits in the sun for the hottest part of the day, or you just got new wheels, call Sharp Window Tinting in Burleson. 817-615-9379, or look them up on the web, sharpwindowtint.com.
Fast Track Student Loans can get your student loans out of default, stop any wage garnishments, stop collection calls, and stop seizure of your tax refund. Give yourself a break. Stop the stress and get your student loan payments down to as little as $25 a month based on what you can afford to pay. 800-709-4395, 800-709-4395, 800-709-4395, 800-709-4395.
The voice of Johnson County, Joco Community Radio.
Hello, hello. It is Real Estate Reality.
She's got looks.
Oh, that's the show.
Yes, we're about to get started here.
Her lips taste like whiskey. She'll take you that extra mile.
Yeah. Okay. The song's playing a little bit longer than usual.
I bet she makes you
No.
feel that you're
Okay, there we go. All right. Hello. We are here on Real Estate Reality. This is Diana Roberts, your favorite realtor. And then I've got also a guest speaker with me today, a lender.
Hi, I'm Jason Chandler. I'm with Affinity Mortgage here in Burleson.
Awesome. How long have you been doing lending?
Too long, a little bit over 25 years.
All right.
Seen several.
Yes.
Several things.
And you love it still? Because, I mean, you're still doing it.
Absolutely. Absolutely.
Awesome.
Even through some of the challenges, it's a great business and helping people.
Bring it a little closer. Oh, yeah. Okay. Awesome. Well, I'm excited to have you on the show. We are going to be talking about lending, the side, all of the information that would really help all of our consumers that are out there in just understanding if you're a new buyer, if you've thought about buying, we really need to just break it down for you, right? And let you know how it works and give you some of those key points and pointers on what can help you if you're not quite ready, but you want to be there within the next 6 months to a year, maybe even 3 months. That's what he's here for today. We're going to really break it down for you. And I'm really excited about today's show. Are you excited?
Absolutely.
Is this your first time on a radio show?
Yeah, it is.
Oh, that's
The
awesome.
microphone's getting to me. I'm like,
Yeah.
too close, too
Well,
far.
yeah, you can bring it a little closer.
Okay.
There you go.
There
Yes,
we go.
adjust it to you. There we go. Perfect.
Got it.
Yes. All right. That sounds much better. Now we can hear your wonderful voice.
All right.
All right. So you've been doing this for 25 years, right? What would you say would be the biggest question that has been brought to your attention from a buyer?
In today's terms is how much do I need to close?
Right.
How much?
Yeah.
A lot of people think they need 20%. If you look on the news, they'll talk about mortgages. They'll talk about, do your 20% down conventional. Well, even conventional doesn't require 20% down. You could get it with 3% down.
Right.
So you do not have to have a lot of money to get into a home.
Yeah. And that's exactly right. So if you can't go into a little bit more depth on that for us, like let us know what right now would you say would be the ideal situation for a new buyer that they never would have thought? Like, don't you love when you have those new buyers and they come to you and they're thinking it's not going to work and they have no like, what is the word I'm looking for? They have no hope. And you're like, you surprise them with like the best news ever.
Absolutely.
Isn't that the best feeling ever?
Yeah. Yeah. A lot of times they'll come to apply. They'll be like, look, I don't know why I'm doing this. My mother says, about to have kids. We need to get a home. And be like, well, let's talk. Let's see what you got. And, we'll get the information. And when it comes down to the programs, like I said, there's some low down payment options that people aren't aware of. And then we also have the down payment assistance. If they didn't have the funds that'll help cover the closing cost or the down payment requirement, plus, a lot of the closing costs.
Oh, yeah.
Yeah. And folks also, there's gift funds that come from family. There's all kinds of ways, including a lot of no down payment options, not just for veterans, the VA loan. Absolutely.
Right.
For
It's
our
100% right there already. If you're
absolutely.
VA, you're set.
but there's a couple other programs that have, the no money down. So
Nice.
there's lots of options out there.
Okay, awesome. And that's one of the biggest things that I feel like a lot of buyers, they come to me and they're like, well, they usually typically I get those that come to me that are wanting to lease because they don't feel that they can buy yet. And that's really not the case. The case of the matter is like they think that they can't because they're looking at credit scores. So let's break into a little bit of that credit score situation because I feel like that for me has been the biggest not downfall. I don't want to say downfall. It's more like a stigmatism. Let's go with a stigmatism. A lot of new buyers or even people that think that they can't buy, there's that stigmatism that they can't because of their credit score. So what would you tell somebody that came and said, well, I don't think I have the right credit score for this, but Diana sent me anyway.
Okay. Well, we have to know what the score is.
Yeah.
That's usually going to, and unfortunately, a lot of people use things, other credit indicators, consumer.
The applications like Credit Karma.
Well, Credit Karma is a big one.
Yes,
and
that one's huge.
And I think Credit Karma is very accurate for what it'll tell the clients how someone's reporting on them. They're reporting them late. I think it does a good job there, but what it doesn't do, it's a totally different parameter than what a mortgage company uses to pull credit scores.
Right.
So if they're pulling, a 680 score, that score could be much, much lower than what Credit Karma is showing when a mortgage company, we're all required to pull the same model, so to speak. So that's why if someone says, well, how can my experience score say, 680 and you're saying 630? Well, it's a different scoring model.
Right.
And there are some places out there on the internet where you can get a model that's going to be closer to what a mortgage company would actually pull.
Gotcha.
But I would warn you, nothing against Credit Karma. I'm just saying when it comes to comparing their scores to what you think a mortgage company is going to pull, it's probably going to be a little different.
Right, because you guys see a lot more too. You guys see actual payment histories, a
Yeah.
lot more in depth. You see a lot more, I think what on like other aspects too, like that Credit Karma may not actually have authorization to be able to see. Is that correct? Would you say that's correct?
Yes.
Okay.
Yes. That's why, like I said, the parameters built into what a mortgage company has to pull, it's just a totally different scoring model.
Right.
And that's why it can be different. But taking that aside, let's say, someone comes in and they have a 600 score. It's like, oh, it's low. Well, you can get financing down to 550 credit on something like an FHA loan. That's going to require about 10% down, but some folks have that. They've just had issues. Life happens.
Yes, of course.
Bad things happen to good people.
Yes.
Happen all the time. So you don't necessarily have to wait and to get that score to 700. Yes, of course, the higher the credit score, the better the rate, the lower the cost. But for some people that need to get into a home, that opportunity is there. I would say normally if you want the real competitive pricing with something like an FHA loan, you want to be at a 640 for the lowest rates and for the lowest cost, but under 640 can definitely be done. Conventional's down to 620.
Gotcha.
Mhm.
Yeah, and I figured that conventional was. Now, what about USDA? Like, what are those? What are the stipulations for with their credit score? Because I know that's another loan too. And if you could just address that, because I think USDA for a lot of consumers, I feel like they don't understand that one
Mhm.
nearly as much because, of course, FHA, conventional, and VA, they're the ones that are talked about the most when it comes to lending.
Right.
So what could you tell us a little bit more about USDA? Like, is that an option for, maybe a new home buyer? What would be a benefit to have that one versus conventional or FHA?
Okay. Yeah. USDA. When I have actually officed in Crowley for about 12 years before I moved to Burleson. So I was lending in Burleson, but the office in Crowley was eligible for USDA.
Oh, wow.
USDA, the way it sets is if you want to get an automated approval, it's usually a 640 score or higher. They'll go down to 620, manual underwrite if needed. That is one of the no down payment options I was talking about. It's actually USDA Rural Development is the name of the program, and you want to get the guaranteed loan, which that's what you get through a lender instead of going directly to USDA. They have tighter guidelines and lower loan amounts allowed than a lender can do.
Gotcha.
Now it is specific to like rural type small towns. So let me give you an example. If you take Johnson County,
Mhm.
Anything in the Burleson city limits or the Cleveland city limits will not be eligible because the population is too big.
Gotcha.
But really, anything else in Johnson County is eligible. Joshua, down to Alvarado, anywhere else in Johnson County
Okay.
is going to be eligible. Now, it does have income
Stipulations, right?
Yes, a family, and it's all based on how many family members you have.
And that are
kinda-
working, right? Or is
well,
it based off of the family members and then how many are working too? Or is it just how many family members?
Well, the deal is the kids count too, the
Oh, awesome.
dependents. So say if you have 1 to 4 family members, that includes the kids, whether they're working or not, and they're probably not working most of the time.
Unless
then-
they're like 16 or older.
yeah, and then is it even legal? Who
Right,
knows?
yeah,
Who
you got to
knows?
be 18 or up, I
Yeah.
think, I believe, right?
Yeah. What? Yeah. Well, let's not get those guys on us, right?
Yeah, no, we don't want that. We're
No.
saying 18 or older.
Yeah. 18 or older if they're making income.
Yes, please.
But yeah, small kids still. Married couple has 2 small kids. Yeah, that's a family of 4. 3 small kids, a family of 5. What's the difference? Well, that's going to kick you up to allowing more income, the more family members. So when you go past 4 to 5, then it kicks the amount of income, household income allowed per year. And that's going to vary from county to county. So if you look at Johnson County, it could be different than Hood County or Parker County. You just have to, that's why you have to have a lender that knows what USDA encompasses, so that they're looking up front at all the factors that are going to determine if these clients can qualify. But yeah, it's no money down
Oh, wow.
and
Yeah.
very, very low PMI.
Oh, that's really good too.
Extremely low. It's almost non-existent. So it doesn't really hinder the payment. And it follows basically the guidelines of an FHA.
Okay. And so you primarily use that one with a lot of so when you have a consultation with one of the buyers that I've sent over to you, you typically go over all the different options that they could have after getting the initial information from them. Is that how you genuinely work?
Yeah, it's going to be
I knew that, but I just wanted to ask.
Oh, okay. Well,
but no, go ahead and explain.
well, someone may not know.
Yeah, that's
right?
why I want you to let
Yeah.
them know, because I might know, but they don't.
Yeah. Well, a lot of people, they'll have something in mind. They'll
Yeah.
be like, look, we want to put this much down. We've been saving, or a lot of them have gift where they've got relatives. They've been like, hey, we want to help you with this first house. So they come in saying, we want to put a certain percentage down. Well, likely that's going to be conventional
Right.
if they're putting significant money down. But then it comes the other options. How much money do they have? And based on that, is that enough to go to FHA?
Yeah.
3.5% down payment, or is where they're looking going to be USDA, because that's a better option too. But I have to check to make sure that they don't make too much income for USDA. So again, it's about talking to the people that know the products up front, and that's what's important.
Agreed. Yes.
But it's pretty much a matter of, hey, let's look at the credit scores, and then let's look at how much money you have, and let's make that work. It's a puzzle that you're putting together.
Right. Because that also goes with that debt to income ratio, right? That is
Mhm.
also going to be a factor when coming to a lender. You need to be able to establish that so that you can know that, they're going to be able to pay the loan back, right? If there's too
Absolutely.
much debt, if there's going too much out and not enough coming in, then that's going to be a situation. So when that's a factor, what do you advise in, with those buyers that are coming to you that have a little bit more of that going on? What's something that you would typically advise them in?
Well, sometimes it's a matter of, hey, there's a couple of, if they have the money, if they have some funds, say, we could get you in with this down payment, 3% down payment, but the debt ratio is a little high. You have a couple of loans with kind of big payments, but not really big balances.
Right.
If you could go ahead and pay and not pay them off now, just pay them off by the time, before we close. So we're not asking you, hey, go pay them off now, then go look for a house. No, find your house and all that, but know that that's going to be a requirement to get that debt ratio. Say for a conventional, 50% is the maximum, 49.9.
Right.
So maybe they're at 51, 52%, maybe, whereas FHA will go to 56%. And VA, sometimes you don't know. I've seen 70% debt ratio approved. It just, I don't even know how they figure it. We run it through the VA system and they come back with their answer.
Yeah.
But usually, you need to be less than 50%, conventional, and less than 55% or around 55 or less on FHA.
Okay. Well, that's really good information too. I think a lot of buyers out there are going to really appreciate being able to understand that a little bit more too. And I think I kind of want to go back to credit score a little bit more too, because I know a lot of times credit score can be a thing. And a lot of times when I talk to new buyers and the credit score is the first issue, at that point, a lot of times, and it's not all the time, it's just some of the time, I notice that it's because, and they don't have that money saved up ready for those closing costs. Because a lot of times, if they do have a lower credit score, that down payment assistance program may or may not work for them at that point in time. Is that right?
Yeah, most of the down payment assistance programs are going to have a 620 minimum.
Yes.
And some of them even higher minimum. So that might not be available. Well, then the next step is, okay, let's, people, they say, well, I don't know what I want to be qualified for. And that's kind of hard. Well, what sales price range? That's not the right question.
It's not.
What monthly payment are you comfortable with?
Exactly.
That doesn't mean what monthly payment do you want, because everybody's like, hey, give me a $500 payment. Well, I'm sorry. If you've looked around, that doesn't
Yeah,
exist.
that does not exist
It
in this
that
market.
does
Not
not
at all.
exist.
You can't even rent
Yeah,
for that much anymore.
Yeah, a thousand's probably not going to happen, right?
No.
So realistically, what's the monthly payment when
Yeah.
you look at that you can make comfortably and you're not house poor? Because you don't want to buy a house and then be strapped to it and you can't go do anything else, right? Because you're making that house payment.
Yeah.
It is your most important purchase, or one of the most that you'll ever make in your life, but it doesn't need to hamstring you. It
Yes.
needs to be, yes, you need to be honest with yourself. This is what my budget allows. And it allows me to still buy groceries and pay other bills on time and still go have a little bit of fun. Go see a movie, go out to eat every once in a while. That's what you have to look at.
Absolutely. And then I always tell my buyers too, like, what's important to you? Like, do you like taking vacations? How far out vacation wise do you typically go? Because a lot of times they don't think about those being part of that finance, that in those finances, if they don't, I know for me at first, when I was a little bit, newly married and everything, I really didn't pay that close attention to a budget. I didn't budget. I didn't have a budget set aside or set up for me with allowance on clothing, with, because you got to factor all of those things in when thinking about those expenses that are needed, right? Like you need a roof over your head.
Oh, absolutely.
Right? And you need a vehicle to get to and from work. So those are two 100%, things that need to be budgeted 100%.
Yeah. Well, when you're looking at your budget, you're just because if you account for all your other bills and say that house payment is $2,000 and you're like, yeah, okay, that I can afford that. Well, have you allowed for that other stuff?
Right.
Have you allowed for medical? You have
Yes.
kids get hurt. Yeah. Even if you have insurance, there's out of pocket expense, tires blow out, stuff happens to cars. I mean, you have to allow yourself enough for savings too. So even so you don't take it to there's exactly 2,000 left. Okay, let's spend that all on a house. Well, maybe no, let's pull that back to maybe that 1,750 house payment or something, where it leaves you 250 maybe to put in savings, hold back each month, because things happen,
Yes.
in this world. So,
and what do you think about, because, okay, I will tell you the new generation, I know in my generation, I was in the mindset of I don't need credit cards. Like my mom and my dad pretty much like instilled that in me, no credit cards. And I don't know why they did that, because they really we've got a call coming in. Hold on one second. Oh. Hello? Can you hear us? Hello? I don't think we're not able to hear you. Hello, can you hear us? Oh, okay. I don't know what happened with that phone call, but it did not work. Was someone trying to call me? Yes. Okay. All right. I'm going to hand this to her very quickly. All right. So what I was saying though is like the newer generation, like a lot of times that credit, not having a credit card can be very, and even sometimes detrimental to even buying a car, let alone a house. Mm-hmm. Because you have to have that line of credit open, right? So I do want to get into that too, because I feel like even with my kids, I was talking to my oldest, he's 17, he's about to be 18. And I was talking to him about, we need to get you set up with some credit cards. And he was like, oh no, I don't want credit cards. I was like, why? Why don't you want a credit card? Like I had to break it down and explain it to him in a sense that was understanding where he understood why debt is actually something that is important and relevant. So will you dabble on that for our consumers a little bit too? Because I feel like that's something that is definitely needed to be addressed.
Yeah, definitely. Many times approach with first-time home buyers that don't have much credit at all. No credit cards. They haven't had vehicle. They'll have some alternative, but stuff that doesn't show up on credit report. If it doesn't show up on a credit report, it's not going to help your credit score.
Right.
So you have to make sure that you're doing things that will actually report on your credit report. Now, the credit cards are the easiest way to get your scores up, but how to use that card is extremely important. Yes. Because for example, if I have someone with little to no credit, I'm going to say you need to build it. How am I going to do that? If I have no credit, no one's going to give me a card. Yeah, they will. There's banks and other places to get secured credit cards.
Yes.
Example would be open. And I always say open up at least two. Do say $300 a piece. Okay. Yes. Do you have to pay this up front? Yes. You actually give the bank or the company, the credit card company, the $300 up front. They hold it and they give you a $300 credit limit. Now, does this mean whoopee? Let's go spend $290 buy no. Because the second part to that is, okay, now you got the credit card. Where do you want that balance to be? And in order to increase your scores the fastest, you want to keep that balance at 20% or less of the credit limit. So if you had a $300 credit limit, $60 or less, go buy some gas, which I know some people are like, well, that's not going to fill up my tank. Well, go buy half a tank of gas, go buy burgers, whatever. And don't necessarily pay it off, but you can make the minimum payments, but you want to keep the balance under 20% in the interim while you're trying to build scores, because the whole reason for doing this is to get those scores to increase as fast as possible.
Right.
And nothing does that faster than a credit card revolving debt. But if you go and max that card out, get it over 20%, it's actually it could make your score go backwards.
Yes.
Yeah.
And very quickly. Because as fast as it can bring it up, that's as fast as it can bring it down too.
Absolutely.
Yeah. So I have noticed that as well. I would say when I first got my secured credit card, I did know, but I was always told 30%. So I was doing 30%. I was doing $90 instead of $60.
Well, that was relying on credit repair, which we can talk about that also. There's credit repair options. I have people that when there's just not a quick fix and someone actually has issues, I can get, them with a specialist who will get them the secured credit cards and at the same time get rid of, say, medical collections and other things that probably shouldn't be on there.
Right.
But,
yeah, because medical collections, isn't that like a HIPAA law?
Well, it's supposed to be.
Okay, I was
here's what I saw the other day.
Yes.
I had to re-pull credit on a client because credit reports with our company are good for 120 days. That's almost 4 months.
Right.
Well, it had taken longer for them, to find exactly what they wanted and if were they ready to move. Well, I pulled credit, one $300 medical collection dropped a score 90 points. So they are serious. Although we as a lender do not count medical collections against people, they're ignored basically.
Right.
But
that's what the car business too. Did you know that the car business doesn't look at that as well?
I'm sure, and they shouldn't.
Yeah.
They really shouldn't. They shouldn't be on there in the first place.
Exactly.
But that's what makes them easy to get rid of, especially if you get a credit repair specialist.
Right.
They can get rid of them, but because although we may not pay attention to them, the credit reports do, and your scores will drop. So if you go to see a doctor or a hospital and they're like, well, you owe this and this, you're like, well, I have insurance, and always make sure if there's any balance, hey, let's work out a payment plan. Do not send me to collection.
Right.
Because
you can always call them and you can work something out. You don't have to pay that full amount.
No,
you really don't. Yeah. Just pay them down. Say, hey, this is the amount of cash that I have, and this is what I can give you today.
Yes.
And then I want to go ahead and be done with it. Can we make that work? And that's the best way to approach it.
They have to work with you.
Yeah, they do. Because first of all, it's a government write-off too. Anything in the medical hospitals. So anything that they don't collect from you as a patient, they can get back.
Yeah.
Typically.
Yeah, it's going to help them one way or the other.
Yeah,
right?
exactly. But I mean, that's another situation.
But going back to what you're saying originally, yeah. So I rely on the credit repair specialist to give me the information, because these parameters I talked about that are built into these credit reports, those change also.
Right.
So what used to be 30%, because yes, that's what for years we were told. About a year ago, they're like, nope, now it's 20.
Oh, okay. They want to give you less.
If you really want to get the scores up. Now I'm talking about not everybody needs to do this. Of course, if you have established credit, now maxing out your credit limits is not a good idea if you can avoid that.
And don't close anything out.
Yeah, yes.
Wait, okay. So guys, we're about to go on a break, but we will be right back, and we're going to talk some more about this credit score situation, as well as some other things that you might want to know about what you're going to have to, the expenses you're going to have to incur when trying to purchase a property. All right, we'll talk to you soon. Stay tuned.
If you are trying to quit drinking or doing too many drugs, listen to me. You don't know me and we'll never meet. I had a problem like you once. I drank and used to party a little too much till it got out of control and almost ruined my life. I realized I needed help to fix my problem before it totally destroyed me. If you've tried to fix your drinking and drug problem and you know you can't do it alone, you need to call the National Treatment Advisors. They'll immerse you into a 30-day program to replace your old habits with new habits and totally change your life. And if you have PPO private health insurance, the entire program may be covered. Fix your problem right now before it gets any worse. Get clean. Call now and learn more. 877-247-1581. 877-247-1581. 877-247-1581.
Out-of-date carpet giving you the blues? Tired of your old dingy and broken tile? Let my friends at the Floor Store in Cleveland, Texas give your home the makeover it deserves. This is Old Taco Joe coming to you for the Floor Store. Whether it's carpet, tile, wood flooring, or real wood laminate, the Floor Store can cover all of your flooring needs. Located at 405 West Henderson Street in Cleveland, Texas, owner Brent Harris can help. Shower tile, tub surrounds, even backsplashes. Give them a call today at 817-641-9444. The Floor Store, they got you covered.
When you're hungry for tender brisket or some delicious homemade cobbler, then look no further than Leech Brothers Barbecue, located at 1106 East Henderson, Cleveland, Texas. Leech Brothers has been family-owned and operated since 1950. Take it from me, Taco Joe Orwinski. Todd and his family have been filling my belly breakfast, lunch, and dinner for a long time. Heck, I even have my own booth, open Monday through Saturday, 6 a.m. to 7 p.m. Come see them for dine-in, carry-out, and all your catering needs.
Serving Johnson County, Texas. Joco Community Radio.
All right. Welcome back to Real Estate Reality. I've got my Linda over here with me, Jason Chandler, and we are just chatting about credit scores. But first, let me go over this really quick, guys. Joco Community Radio is proud to be the voice of Johnson County, Texas, and is live 365 on the TuneIn Radio Network. To listen or watch, simply go to tuneinjoco.com to choose where and how. The Joco Community Radio app is now available for free on Android and iOS devices. Simply search your store. Check out our lineup and more on jococommunityradio.com. This episode and more brought to you by Patriot Claims, making your insurance work for you. Reach out to your Texas sales rep, Nona Reed. I love you, girl. 844-TEX, HAIL, 844-839-4245. All right. Now let's get back into that credit score, Jason. So I think we were pretty much wrapping that up, but you were talking about, now I'm doing it. See?
Sorry, my fault.
No, it's not your fault. I do this all on my own. Trust me. So you were talking about the breakdown though of what you're seeing on that credit score is what we were talking about last, and we got interrupted by the break. We needed the break though. It's okay.
You gotta have the break.
You gotta have the break. It's okay.
Mm-hmm.
Yes.
Yeah. Well, basically, what I was saying is, if you have established credit, I'm not trying to freak everybody out. That's like, oh my God, my credit card balance is over 20%. No, if you have good established credit, it's okay to go over 20% on your credit on your credit limit. You just want to make sure you're not approaching the credit limit itself, your balance, or that will start dropping your scores pretty drastically. So, if you can try to keep them around 50, 60%, once you have established credit, that's a pretty good rule of thumb.
Absolutely. Absolutely. Okay. So that is good information too, because I do feel like sometimes when I'm talking to people, buyers, when I talk to buyers, typically I try to get some of those questions in, and this is for you agents. make sure you understand a little bit more about your client in the beginning before sending them to the lender, because then you can talk to the lender. I like to call Jason, hey, Jason, look, this is what I got. This is kind of where he's saying he's at. I don't know. I mean, he, she, this is where they're at. And I'm just like passing this information over to him, which kind of gives him a little bit more of a heads up. And he kind of is already maybe establishing some of those ideas that he can already come up with for that particular client with what I've given him informational wise. Would you agree with that? Do you feel that that's helpful?
Absolutely. The information is power.
Yes.
It enables me. I now, what they've told you
is not always what they see.
Well,
what you
is once they realize I'm actually going to be looking at credit report, maybe this comes up, or maybe they're like, well, I do have some more money here, because what I always tell them is, hey, first of all, you have to know, you have to tell me everything.
Yeah.
Now I decide what underwriting sees, right?
Yes.
But with me, it's imperative that you be upfront and as honest with me as possible, because I'm the one that's going to get your file there and ready and I'm your friend.
Yes.
And not that underwriters are bad. Hey, we got to have them, but they've got a different kind of job.
Yes.
And once they see something, they can't unsee it. So, it's important to give your lender all the information up front. And as a realtor helping with information, absolutely.
Yes.
Yeah.
And I also have started working with my buyers too in telling them, look, hey, we might not have found a house yet. This is what you've provided to him, just to make sure that you can, 100% be more than just pre-qualified, right? Because it's good to be pre-qualified, but it's also good to have a little bit more before going to closing, right? Like knowing that when we do go to close, you're going to be good.
Oh yeah, absolutely. But let's talk about in this market,
yes,
just trying to get an offer. So what I tell my real estate partners, my realtors, is, hey, I need your help, because when your client approaches, and yes, I will issue a pre-qualification same day, so you can go make an offer.
Right.
But what if that offer is not accepted?
Yeah.
And what if the next? While you're maybe showing them a home or two, I need to get all their information up front, get them through underwriting. Well, what does that do? Guess what? Once they've been through underwriting and their income, assets, and ability to pay, credit have been reviewed and approved, I'm going to issue a pre-approval. Okay.
Right.
That's going to mean, hey, you go to make an offer. Look, seller, listing agent, we don't need a financing period. We're approved.
We're ready to go.
Put zero in that blank. We don't need any time. We need appraisal, title, and survey to close.
Absolutely.
So what does that mean? Well, appraisers right now running a little longer, but hey, we could still look at closing that in 2 or 3 weeks instead of taking the whole 30 days to close it, because you've basically taken the initial underwrite out of the equation.
Yeah.
And it's going to go back much quicker. We've got the information, and what's that going to do? It's going to get your buyers accepted, because the sellers, the listing agent's going to sit there, look at all the offers and go to their seller. Hey, look, these people have already been through underwriting. I've talked to the lender, because they call me. Listing agents call me.
Yes.
Got a call on Sunday. Are you sure about that? I was like, these clients are great, without divulging exactly how they're great.
Right.
I can say, hey, they have great credit scores. I can say, hey, they have ample funds to close. Yes, it's a good down payment. And it lets the agent know, hey, I talked to the lender. The lender's real optimistic about this, and it helps them, distinguish between all those offers. But
Absolutely.
that whole fact of, hey, look, these people have already been approved. We don't have to worry about something blowing up in underwriting, like the underwriting didn't agree with the income, which is the biggest reason why, if a loan officer calculates the income incorrectly, from what the underwriter is going to do, well, that can totally change that debt ratio that you spoke about, and it could kill the deal.
Absolutely.
So to me, that's the biggest, is, has it been through underwriting?
Yes.
And if it has, boy,
you're good to
it's
go.
an optimistic deal. But it takes the realtors also explaining to the buyers, hey, Jason's going to ask for this stuff.
Yes.
Up front. Here's why it's important to get it to him really quick.
Right.
Explain again. It's going to distinguish you from all these other people making offers, because you've actually been through underwriting, officially approved.
Yeah.
It's a big deal.
It really is. I 100% agree. And that's why I like to go over that with my buyers from the beginning. Even I was even doing it a little bit before this market. I was letting them know, hey, he's going to ask for a lot of documents. Just go ahead and get all those documents over to him, because that's what's going to make you a little bit more, appealing to the seller once we send this offer in. And not only that, but it's also going to, but I like to explain to them too, just because you've turned all this in right now, the bank statements and stuff like that, if we don't get closed or within like these next 30 days, you know, we're looking at having to reissue those documents. So, just be aware that he may ask for them again, because I know that I've had some buyers that have come to me and said, well, he keeps asking me for these. And I'm like, well, yeah, because it's that time. Like, remember I said earlier, you're going to need to re-give them those documents, because now these are new. This is a new month. This is a new bank statement. This is more, now instead of last year,
Yes.
or last couple of months.
That's true. Underwriting likes they want, and it's not what the individual underwriter. These are, when you talk about conventional financing, FHA, VA, that's government, USDA, government financing. These rules are written in Washington, D.C.
Yeah.
These guidelines come from Washington, D.C. People want to get mad at the lender. Oh, I've never been asked to do this before. Oh, okay. Well, how long ago did you buy a house? Was it before the mortgage crisis or after?
Right.
Because a lot of things changed. Yeah, I was through that. Like I said, I've been in this business a while.
Yes.
And things changed drastically after the mortgage crisis. Guidelines got tight, and here we are. But there's still plenty of good programs.
Oh yeah. Oh yeah, absolutely. And and that's another thing I addressed on my very first show when I first started, is I had a buyer that kind of like written everything out for me, and just being more informed was one of the things that, she had mentioned. And she also mentioned with the lender, to be comfortable with the lender, because they're going to ask those hard questions. They're going to ask for documents and things that are not always easy to give up, because not everybody wants everybody or anybody, like especially somebody new, to know all of their business. But at the same time, you got to look at what you're trying to accomplish here, and what the lender is trying to accomplish for you as well. They're just they're there to do that service for you, to help you get through that the best to their ability. And I feel like you've done a really great job with that with a lot of my clients already.
Well, what you want as a buyer is not an application taker.
Yeah.
I could sit there and go take your information, or you can go fill it out on my website, and I kind of look. What you want is a lender that's going to sit there and underwrite it himself. A loan officer is going to underwrite the file like an underwriter would in the beginning.
Right.
Let's get the stuff up front. Let's get letters of explanation. Let's get as much covered as possible. So when that approval comes back from underwriting, and I'm looking at two things. I've got to prove earnest money cleared their bank, and there was one credit inquiry or something that was showed up since then. What happened there?
Right.
But it's easy stuff. Or a previous address showed up. Did they own it or not? When those approvals come back easy, and you're able to tell the buyer, oh, clean approval, I need a couple of things from you. Yeah, we're waiting, we're just waiting on the appraisal now to come in title work or whatever. That's a good thing. Yeah. But the work you want to get with a lender who's going to do this up front, and he or she may ask for a lot of things up front, but that's what the good ones do.
Yes.
Because they're actually underwriting the file themselves and knowing what an underwriter is going to ask for. They're not just application taking and kicking it to another department,
Right. Absolutely.
That's extremely important.
And I think like with you, like you care about the mortgage, like you care about what their mortgage amount is going to be with their finances. I think you really address that with them, and you're really mindful of that too. And so that's what I've told my buyers too. Like, yeah, this might be what you're approved for, but in this market, we need to look for lower. Because if we're looking for lower, then you can go a little higher, possibly depending on, if you can cover what's over the appraisal, if the appraisal doesn't come back correctly, or if the appraisal does come back, we got to be aware of that too. And if you can't cover that, so that's something that needs to be, that's usually what I typically address with my buyers as well, especially right now in this market.
Well, and I was going to mention this earlier when we're talking about, well, what kind of payment can you afford? Because it's not really, well, what sales price do you want? It's what payment can you afford?
Absolutely.
If you get a fixed rate, your principal and interest never changes.
That's right.
But property taxes can change, and around here they have been changing. So you can't look at this payment and say, as long as that never goes up I'll be okay. Again, don't back yourself in a corner. Don't be house poor.
Right.
Allow for knowing that, hey, over time, now hopefully over time your income increases too, but over time things like taxes and homeowners insurance can change slightly, and that might mean a slight increase in the future on your payment. So just make sure, like I said, that payment feels good, that when you know you're gonna have to make that payment, it's not a dread, but it's like, yeah, no problem.
Right.
I got this, and we're still gonna have great fun, or just live a happy life. Just don't stress yourself out over a mortgage payment.
Yeah.
Be honest with yourself up front.
Exactly. And I understand that too. And that's a lot of, like, in this market, and what I was talking about on my last show too, is like, when you walk into a house, and it may not be, because the market is a little bit higher right now. So you may have to walk into something that may not be that price range, that has everything you already want. It's not going to be your dream house maybe, but it could be. I always tell my buyers, there's potential here. There's times there's things that you put money aside for, to start slowly making this house into the most beautiful dream house of your life. There's potential for each and every house, especially for some of them that are, still a little outdated. But what can we talk about? What can you say to those that are looking at that with like an open mind, and maybe they want to add maybe some to a construction loan, or maybe a rehabilitation, or what is the word I'm looking
Renovation.
for? Renovation. Thank you. That's it.
Yeah, absolutely. Good job with that. Good job.
Thank you. It took me a minute.
Yeah, you did all right. You did all right. And see if I can say it now. Yeah, renovation loan.
Yes, he got it.
All right. Now we actually have a product. There's products out there, and we offer them also. Where, let's say you're looking at a house, and it's like, this would be the perfect house if.
Yeah. There's always that if.
If it had one more bedroom, if the kitchen was updated, if it had a swimming pool, that kind of stuff. Well, that's where you can actually get a renovation loan as a conventional. You can do it as a conventional. There's also the FHA, version of going 203K. I would always try to look at the conventional first, for less headache. But they're out there. They're out there. They're both renovation loans, and you can actually make your offer. You close on time. The sellers are paid. The realtors are paid, and then the buyer has about 6 months, up to 6 months, to do all the renovations. It does take a general contractor.
Yeah.
To do it, but maybe it's that one house that, if it only had this would be perfect.
Yes.
And guess what? Maybe the sales price is down too, because people might think, hey, if I'm approved for 300, well, why am I looking in the 225 range? Well, what if that perfect home is sitting there at 225, 235, if it just had another bedroom,
right?
Or the pool,
an extra bathroom,
just a half a bath, just,
or some updates on it, even
whatever would make that put a big smile on your face, right?
Yes.
That's what those loans are for.
Absolutely.
Now, they take a little bit longer to close. That's where but about a week or so longer, because you're having to get you have to have a general contractor.
Yes.
You got to get all these bids in, and but with the right seller that understands what you're doing, that is definitely a good way to go.
Yeah. And a lot of sellers right now may even look at that even more so, because now they know that, look, they saw the potential in this house, even though I don't want to do anything with it.
Mm-hmm.
There's a lot of sellers that are still out there that don't want to touch it. They're like, I don't have the money, or I don't want to spend the money on fixing any of this. I'd rather the buyer just take that on. That's all them. And so with that being said, there are those sellers that are be like, oh, they want to put that money out to fix all this. Okay, cool. I don't have to,
mm-hmm. Right.
So that could be very beneficial to that seller. So I think that that's key in knowing that they can accommodate. Well, that loan is, they can get that loan is available to them in order to help them get the house that may be under a little budget, because, they're trying to look at their mortgage payment, right? They're trying to keep it where it needs to be, but also finding a house that's doable, that's something that can be what they want it to be. So I think that's huge.
Absolutely.
Yes, I agree.
All right.
All right. So like, let's go into down payment. We have 9 minutes. Let's go into down payments really quick. What would be the down payment amount? Because okay, I know what I tell people, but I want to hear what you have to say.
Okay.
Because you are the lender, and
Okay.
I always send my buyers to the lender. Hey, that's a lender question. I want to ask them, but we do have those cool apps, as agents that we can put everything in and calculate what typically those closing costs are going to be.
Okay.
What would you say to somebody that came to you first before going to an agent? What would you say to them on how much they might need to have aside for a closing cost, regardless of whether they can have down payment assistance program or not?
And it's a rough number because what are the closing costs? Well, there's cost from
That's why I asked you.
Okay. Where there's cost, there's lender cost, right?
Yes,
First
yes.
of all, do you want a par rate? What does par rate mean? Par is a no discount point cost. In other words, if you had 4% rate and there's no discount points assigned to that, the client's getting that, then that's a par rate.
Right.
But if they wanted to buy that down, they wanted a little lower, they may choose to pay a half to 1 discount point to buy that down. That's no longer a par rate. So that's the first question.
Right.
But is what are they looking for? But let's assume par rate, where there's no discount points. People are like, yeah, I don't want to pay any discount point. What's the par rate? Okay. So you go from there. What do you have with your lender costs? That's going to be normally there's some underwriting admin fees, appraisal. Got to get an appraisal
Absolutely.
on it. The survey. Hopefully the seller has an existing survey.
Hopefully.
Sometimes they don't.
Sometimes I do.
Sometimes they've
That's
added
okay.
on. But besides that, what the biggest part is really the prepaids, but it's still closing costs. It's still out of pocket. It's your taxes and insurance.
Yep.
But the way you have to look at it is, even if you had no mortgage on your house, you're still going to have property taxes and you're still going to have insurance. But as lenders, we have to set that up, right? We have to set up to make sure that there's enough reserve in there that when these taxes and insurance come due.
Right.
So if someone were to say $300,000, what's my what's my down payment? Let's say it's just your typical 5%. Someone goes 5% conventional.
Right.
Okay, that's 15,000. Okay.
Yeah.
For 5%. Then what are my additional costs? Well, with escrows, you've got to pay a year of homeowners insurance up front. We have to set up the escrows. At that point, I would say, depending exactly on taxes and insurance, you could be looking at anywhere from $7,000 to maybe $9,000.
Right.
It depends on what the taxes are. Now, a lot of times these taxes on a $300,000 house you're making an offer on, the tax office is not taxing it at $300,000. They might be taxing it like it's $245,000. So as a lender, I have to sit there and assume until you give me a house, I don't know what taxes are. So I've got to base everything on sales price.
Exactly.
But you come back with this house for $300,000, it's being taxed like it's $245,000. Whoa, those taxes are a lot lower. Well, now the costs are a lot lower.
Absolutely.
So taxes and insurance have a huge effect on your monthly payment and on how much closing costs you're going to have to pay.
Absolutely. So it can fluctuate. So typically what I tell them is I would have anything from, 10,000 to 20,000 set aside if you're wanting to do like a conventional loan with,
Yes.
with no down payment assistance program or anything like that. I typically tell them anywhere from 10 to 20,000 would be a good range with all the closing costs included.
That should absolutely cover it.
Yeah.
I mean, if you're talking from above 300,000, the 350 mark to maybe the 550, the new conventional conforming loans are 647 now.
Oh, nice.
So if your loan amount's not over 647, that's not a jumbo loan anymore. Last year,
I did not know this. I'm learning something new, guys.
that changed January 1st.
Oh, sweet. Okay.
So 647,000.
That was probably an email you sent me that I hadn't opened yet.
Yeah. You gotta
Sorry.
open them.
I know. I do. I know. You're right.
Osmosis doesn't work. But
It
yeah,
does
no,
not.
that's a big deal because jumbo loans tend to cost more. The rates are going to be a little higher. The costs are going to be a little higher.
Yeah.
So if you can keep it in the conventional / conforming, area, then that's going to be better for you.
Absolutely. Awesome. Okay. Well, I think we are definitely setting them up with some good information. I definitely want to have you back on because I feel like there's still so much that we haven't even touched base on that consumers probably could really use some assistance in knowing too. And what I'd love to do is I'd love to hear from you guys. Send me your questions. Send me some things that maybe you've already had with the lender that you didn't understand that you might want a little bit more clarity on. And we can definitely have Jason back on the show and go over some of that stuff with you guys so that we can just explain it a little bit better. I love that. We love questions. We love feedback. So if you got anything like that, please let me know. You can send it to me in my private messenger. You can send it through Joco Community Radio to get to me. You can even call in on the show while we're here on the show and ask your questions. We love that as well. So I know we're running out of time really quick, but so you're located in Burleson, right?
Yeah, about 2 blocks from here, 2 or 3 blocks, just down Wilshire.
See, so I can have them over anytime.
Absolutely.
Okay.
If I was younger, I'd run.
Oh, there you
run
go.
Over here, but no,
No,
not going to do it. I'm going to drive.
You're as young as you feel, though, Jason.
I know. Maybe
Right.
if I ran, I'd feel younger.
Yeah, maybe. I'm just saying. I mean, you should maybe listen to my Monday show.
Yeah. Remind me of that.
I will. I'll remind you.
Get me motivated.
I'm going to keep you motivated. I got
Okay.
you. I just started back at Hotworks and I love it. I love it.
I've heard a lot of good things about that.
I love it. Yes. You might like the cycling and the row.
I've heard it.
It's
I've got
very
some,
nice.
Got some buddies that have actually done it.
They're gonna, yeah. I'm gonna have to have them like be my sponsor because I talk about them a lot here lately. I'm gonna go talk to them about that after the show. No, but yeah, I think I think it's great that what we covered with them so far. I think that's pretty much the initial beginning steps, right? That I feel like we've covered. So now it's really getting into the nitty gritty on our next show that we could really actually break it down even more so that they're understanding of some of those terms and terminology too, because I feel like a lot of times buyers don't even understand our terminology. And I have to remind myself too, because, I'm a little educated. I'm quite educated. And so when I say my real terms, they're like, I don't, what does that mean? I'm like, oh, I'm sorry. Hold on. Let me break that down. I apologize.
Yeah.
Right? Do you get that a lot?
I'd like to say knowing mortgage terminology makes me smarter. No, it doesn't. It's just something I've done for a long time. So it's called jargon.
Yeah, jargon.
You deal with mechanics. They've got their own jargon. You might be sitting there going, whoa, what are you talking about? Instructions say the same difference. I mean, there's jargon in every profession. So yeah, don't let that intimidate.
No.
And if you could actually, it would, if we had some questions, to go over, that would be awesome.
Absolutely.
But I definitely want to come back. So just let me know when.
All right. Awesome. Yay. I'm excited.
Okay.
Yeah, because we definitely want to go. I know terminology is huge. I know that is. And I do want to say to our consumers too, because we still got some time. So I want to say to our consumers too, that, if you guys do have questions, if you're talking to a lender and you don't understand that, wait, what did you call it? I love it.
Jargon.
Yeah. If you don't, I've never heard that before. That's crazy. Yeah. Okay. Anyway, but if you, if you have some jargon that's speaking to you, just let them know, hey, that's jargon. I need you to explain that to me. What? Because that's okay. Like everybody does have a different profession. Everybody has a different way of explaining or expressing their whatever that they do professionally wise. And so we do need to be better about asking questions. I feel like sometimes we feel, oh, well, they're going to think I'm stupid. No, it's not stupid. Nothing is a stupid question, especially in real estate, because every transaction is 100% different. Would you agree with that? I know you know.
Yes.
I know you know.
We're
still learning
things.
That's right.
After all this time, there's still things that have happened to me recently alone, that I was like, wow, I'd never have seen that before. And now it happens.
Yes.
So yes. And that's what makes it exciting. It doesn't get stale.
No, it doesn't. All right. So I'm going to have Jason back on the show. I really hope you guys enjoyed the show and got some good information. We look forward to having you tune in next Tuesday at 5:00. Don't forget. All right. We'll see you then. Have a great night, guys. Live your best life.
From Burleson to Venus and Grandview to Godley, this is the voice of Johnson County, Joco Community Radio.